Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about will buy-to-let property investing work in 2024 and beyond. Now we're halfway through, pretty much more than halfway through 2023, and it's really tough this year. So will things be different in 2024? Well, buckle up. Make sure while you're here, you subscribe to the channel and hit the bell notification. We're on the way to 10,000 subscribers now. We're more than halfway there. We've got 600,000 views on the channel and we're getting 70,000 people watch this every single month. So thank you for that. And while you're here as well, smash the like button, guys. Go on, do that right now. Smash that like button. Absolutely destroy it. That will help us with the YouTube algorithm. We'll get more views, we'll get more subscribers, and we'll hit that 10,000 a little bit sooner. So, let's talk about buy-to-let. It is tough in the buy-to-let world at the moment. We've got so many things against us and so many things that potentially could carry on in 24, 25, 26, all the way up till 2028, one of them that's a problem. So let's talk about what's tough, because I think we need to get a real balanced overview on buy-to-let here. So one of the biggest things hitting buy-to-let landlords at the moment is something called Section 24. And that's when you own the property in your personal name, you're then taxed on the gross rent, meaning if you get £1,000 rent, you're taxed on that and you can't make deductions. You can make a few for maintenance and stuff, but not much, right? So you get £1,000 rent, your mortgage is hopefully 500 quid. Now, if you're a higher rate tax earner, you're getting taxed on this £1,000, but you might pay nearly 50% tax. So your tax might be nearly 500 quid, meaning you make zero. A big fat zero on that deal there. Then the boiler breaks, then something happens and you lose money with that investment. Now that's if you own in your personal name, and there are tons of landlords in that situation right now, which is why you hear lots of negative press about buy-to-let investing and how it's hard and it's really not very cost effective, and that's true. If you own in a personal name, it is very, very hard to make money. So you can overcome that, and there's lots of videos on this channel if you want to really know about this. You can overcome that by investing through a limited company. That's the way to do this now. Now, these landlords that are in this situation will sell cheap at the moment. They're looking to get out of the market. So that's an opportunity that you could take to get a property at a discounted price. What else have we got to worry about? Well, interest rates, obviously, right? So interest rates are going up. And that means you can borrow less. It means your monthly payments are higher. As a buy-to-let landlord, you generally pay interest only. So it's going to be considerably more expensive, meaning less margin for you to have a buy-to-let property. So that's another consideration. That's another downside on this. And one that you'll see in the news at the moment, that's potentially 60% of landlords are looking to leave the market because of that. And that's the energy performance certificates, the EPC. Every property has one. And if you look on Rightmove, you can see how this works. It goes from, I think, G all the way up to A being the best. And by 2028, landlords have got to get it up to a level C, or they've got to spend at least £10,000 on that property to get it to that level. Now, and we've done a video on this the other day, where that's a problem is down south, £10,000 invested in your property that's worth £1 million quid or £500,000 or 250 grand even, not so bad. What if you own a 50 grand house up north? That's a huge percentage of that property that you've had to spend that EPC money on. So that's another consideration. Now, house prices are also potentially going to drop. So this is another consideration. So doom and gloom, lots of bad stuff with buy-to-let landlords. Now, I think in 2024 that these people are still going to be hit by Section 24. The interest rates are going to be rising potentially until the end of this year. So the rates from today that you're going to get in 2024 are going to be higher for sure. EPCs, we might have a bit more clarity on that and when that's going to actually kick in, but we don't know for certain either. And house prices potentially will be down. Now, the south of England, I've said this in multiple videos, I just don't feel you can do buy-to-let in the south. I don't feel that that's going to come back in 2024. I just think it's really hard. I've got a buy-to-let portfolio in the south. I've got properties in Dorking in Surrey and Hastings as well in Sussex. And so those two areas are hard. My recent buy-to-let purchase in Dorking, I had to put more than 25% deposit in order for the numbers to stack up. The rents are relatively low compared to the value of the house. So let's just say in Doncaster, I've got a house that's worth 100k and I get 625 rent. It's gone up, right? New tenant in there. Now in Dorking, I've got a property that is worth 285 and the rent on that is 1,000. It's £1,000 per month. So it doesn't stack up, does it? Right? So if I bought 3 of those, I would be getting nearly £2,000 in rent, whereas down south I'm only getting £1,000 in rent. So the numbers are really tough down south. So I don't think buy-to-let's going to work in 2024 in the south. However, I do think it works in the north. I think even with further interest rate rises, buy-to-let is going to work in the north. I'm looking at deals now. They still stack up right now. They still stack up with a higher interest rate. And what you'll see, if you learn how to find deals, is people that need to sell. These people here need to sell. They're getting taxed so much. They've got the EPC burden coming up. They got all of this stuff. So they will sell to you at below market value. I'm looking at a deal right now, 3 flats, 1 house for 120 grand for all of that. And that person just wants to get out of the market. They see that it's really tough. They own it in the personal name, so the tax is crazy bad for them. But I can buy it in a limited company. I can get that investment through and make really good margins on that. So there are deals up north, there are deals in the Midlands, and it's going to be hard. It's all about finding a deal where you can add value. So I wouldn't be buying a buy-to-let, a vanilla buy-to-let. I wouldn't see that working in 2024. So you could look in, I invest in Doncaster, right? So you could look at Doncaster, you could find a nice house, new carpets, new kitchens, already been done. Someone's already made the money on that property. So if you now take that on, you're going to make a small margin on that. It's not likely that you'll increase the value of the house, so you're going to probably overpay for it. And relative to the house value to the rent, it's not going to work. So what you need to do is look for deals that are below market value. Look at auctions. They're starting to become very good again. Look at people direct to vendor. Look on Gumtree. Look in Facebook groups. People that can't afford to sell with agents. Learn how to do Facebook advertising and advertise through that medium as well. There's tons of things that you can do in order to attract people on an off-market basis. Those deals, like the one I'm doing, 120 grand for potentially 200 grand's worth of property. And the reason that works is just because they want to get out of that deal. So this market, there is always going to be deals. The south, very hard. The north, there are deals. They're coming on all the time. You just got to learn how to find those deals and work out the numbers on it. Stick it on an interest rate that works for you. Make sure you've got margin there. Make sure you look and get a discount so you've got enough in there to be able to do the EPC stuff. That's a consideration. Consider interest rates might go up. You can protect yourself by fixing for 5 years instead of 2 years on that. By 5 years, this will be a very different scenario to what we're in now for sure. And understand that house prices are going to go down. So when you offer, take that into consideration. Knock off 10%, 15%, or find something you can add value. Can you add an extension, a bathroom, a kitchen, carpets? What can you do to make that property better value and work for you? That's what I want you to think about. And if you really want to get this stuff nailed down, join the Property Accelerator. It's really fast growing now. We've got hundreds of courses on buy-to-let, on refurbishing properties, on Airbnb-ing a property and all of that. And you can try it for £1. And so I'm going to pin a comment, click on that link, grab a copy of the Property Accelerator. It's just a quid, guys, and we'll mentor you and take you through. Now's the time to learn property investing. Everyone else is selling courses for thousands. We're asking you to check us out for £1. What's fairer than that? While you're here, do check out all the other content on the channel, including this video right here.